Hello, everyone. My name is Srishti and I am a digital transformation consultant at Hyperbots. Today, I'm delighted to have Claudia Mejia as my guest. Thank you so much for your time, Claudia here.
Hello, Srishti. Nice to meet you.
Nice to meet you as well. A little bit about Claudia for our viewers. She is the managing director at Ikigai Edge, and today we will be discussing Delaware sales and use tax compliance. So let's begin. To start off with, Claudia, if we can start with the basics for our viewers, could you provide an overview of Delaware's approach to sales and use tax, and how does it differ from the other states?
Okay, so Delaware does not impose state tax, which is really good for those that are buying goods within the state. So basically, anybody that sells vehicles, computer hardware, software, they don't have to charge sales tax. However, they have another type of compliance, which is basically the gross receipt tax, and is calculated based on the monthly revenue that the company is based on gross revenue without deductions. So that's a compliance that they need to follow.
But that's a relief for the companies who are working over there, right? And since Delaware does not have a sales tax, are there still compliance requirements that businesses need to manage?
So yes, so that's why they have the compliance to file for the taxes for the gross revenue. And they have to do it basically making sure that they calculate those revenues right by product, by industry, to follow the regulations.
That makes sense. Do you have any examples to just explain how that would go by?
So basically, if I, let's say, medical devices or computer hardware retails sold the products within the state, they will calculate the gross revenue on those products, and then they will pay on the rate that the state has set up for those particular products. So that's basically how it's done. The important thing is that you're making sure that you have those standards well placed and you follow the rates within the state so you don't fall to comply with the regulations. And well, most importantly, you don't have penalties. Nobody wants to pay.
That's true. And that's very interesting. So that brings me to the next question. How often does Delaware's gross receipts tax rate change? And how can businesses stay updated on these requirements?
So usually is relatively stable, this tax rate. The state might need some extra money to pay for certain things, so they might change it. But like I said, it's usually very stable. It may change by the industry, so it's different if you basically have an industry that is retail versus services, that different rates apply. And the Delaware Division of Revenue are the ones that basically set up these rates, and you just need to make sure that you follow their publications. Also, there are software, a lot of companies just making sure that they have software that is integrated with the tax rates and does it automatically.
Understood. What are some of the primary resources available to businesses to stay informed about gross receipts tax requirements in Delaware?
So the Delaware Division of Revenue are the ones that basically produce all the tax rates, the guidelines, the regulations, the changes. So they have recurrent publications and alerts for those. So as long as you follow that, you probably will be okay. But also, like I said, third-party software, you have integrated solutions with those rates, and you basically your transactions will follow the right regulations, and that's the beauty of certain software, that it does the work for you, right?
Yes, and that's really helpful. So, can you just specify challenges that businesses face when managing compliances with Delaware's cross receipts tax? And if you can just share some examples, that would be really helpful.
So you have the challenge that even though it's good that you're only going to have to do the gross received tax calculations, you also have the other calculations that if you ship a product to out of a state, you also need to collect those sales taxes. So you have two different activities going on. But for coming back to the gross received tax, you have to make sure that you calculate it for the right industry, for the right product, making sure those taxes are applied correctly for that. Also, making sure that no deductions are taken off. These calculations are based on gross revenue, so it's important that calculations are diligent how they are done and categorized properly, depending the revenue source.
Understood. And given your experience, how do you think can artificial intelligence help businesses manage gross receipts, tax compliance more efficiently in Delaware?
The best benefit is that it's going to simplify the compliance, right? The AI can basically automate the revenue tracking by industry, by product, and that will make anybody's life easier and take the burden of administrative calculations. Also, it's going to apply the rate in real time. So as soon after there is a change or an alert, it's going to take the right rate at the right time, and it's going to apply it automatically. And also the reporting and filing assistance. You're going to have a dashboard that you can see in real time how your revenue is growing, what is your liability, and those things happen right on time, and you can make decisions right on time instead of waiting for somebody doing this work manually that can take weeks.
Yeah, and that sounds really interesting. And how do you think can AI support companies during audits for gross receipts, tax compliance in Delaware?
Well, the most important in an audit, I will say, is to have the right documentation, right? So if you are able to retrieve a documentation at a very deep level fast, it's going to create just compliance to your auditors. It's going to speed up the process. Also, it can detect any errors, so it can go back to the history and analyze the transactions and see if at some point the rates were not calculated properly. So being that said, it's going to speed up the process, it's going to be faster, it's going to be better. And the beauty with these software companies like Hyperbots that has the capability to do that, not only to do the capability of the reporting, the revenue tracking, but also the compliance with the auditors and the documentation retrieval.
That's really helpful. What do you see as the future role of AI in handling Delaware's gross receipts tax compliance?
It's more that transactional, right? What we just talked about is making sure that all the transactions are done properly at the right rates at the right time. But when you look really about decision making, making sure your business is looking forward business, then you have the predictive analytics. Now you'll be able to forecast your revenue, you'll be able to account for seasonality and making sure that you have the cash flow to cover those liabilities. So that's very insightful for a business owner. Cash is king, and as much you can be able to manage the cash properly is a great benefit. Obviously, everything is going to be in real time compliance with your dashboards and making sure that you basically have alerts of any changes right on time. So, like I said, Hyperbots have all these capabilities, and why you make your life harder if you have basically a system that can streamline your operations.
That's so true. And thank you so much for sharing these insights with our viewers. And that really brings us to the end of our discussion for today. So thank you so much, Claudia, for joining us. And big thanks to our viewers for being connected with us. And I'll see you around. Goodbye and have a good one.